Alrighty YouTube, welcome to another trade recap. It is the 31st of August 2023. My name is Nick. I am a day trader, day trading the 5-minute chart every single day. If it's the first time that you're on my channel, I am trading Forex, commodities, indices, crypto. Wherever I see a play that matches my playbook, whenever I see a setup, I am in the market. And I kind of focused on the first 40 minutes of the London session. That's my preferred trading time window. And today we're looking at two trades which I took, one on German 30 and one on US 30. Whereas the US 30 was a winner, the German 30 trade was a loser. And the reason why it was a loser was that I did not consider the higher time frame structure. Meaning at the time of trade execution, I missed that. I did not look at this properly at the higher time frame structure, and I traded against it and got stopped out immediately. Now, just briefly, when I'm speaking about the higher time frame structure, I am of course a fan of the trend. The trend is your friend, no doubt about that. However, scalping on the 5-minute, I do have to point out that sometimes I do scalp against the main structure. So I scalp against the main trend, I do scalp with the trend, and so forth. However, when I'm looking at the 1-hour structure, I look not necessarily at whether the market is trending or it's ranging. I more so look at, for example, multiple touch areas. If I see a level, a support or resistance level, where price multiple times has found support on, and this combined with the patterns, combined with the time frame, combined with my other confluences, gives me reasons to enter then trades in certain directions. I look at breakouts on the 1-hour. So for example, if this is our 1-hour chart, I like to see breakouts and pullbacks to enter. If I get a nice pattern over here which matches my playbook, I am in the market. I look at trend line breaks on the 1-hour, pullbacks, demand and supply, and so forth. So I call it the 1-hour structure, but it's not this traditional way of looking at it as you might see on YouTube, or as you might have learned or seen from other traders. Now that being said, let's quickly jump into German 30. I saw on the 1-hour a beautiful head and shoulder pattern, one of my favorite patterns, in fact, if not my favorite, drawing a little support zone right here. So you can see that we had a nice head and shoulder, nice support. Then we had this nice trend line break over here. In Asia session, of course, market rushed to the upside and then pulled back and kept on going. Okay. Now, what's very nice is that whenever you have these right shoulders, and whether it is on the 5-minute or on the 1-hour, I motivate you to look for a demand or supply coming out of the right shoulder. So we had this demand, and I had this all drawn up, and I was actually ready to take this trade if it would have come back here, but funny enough, I did not. Now at the same time, I also had over here this support level, or a resistance level, sorry, right here I had this resistance level drawn up. And now jumping onto the 5-minute, I show you why I took this trade. What I was seeing is that we had at this resistance level, sorry, just quickly go back to the 1-hour. In fact, that's the resistance which I had, my bad. That was the resistance right here. So what I saw on the 1-hour was this. I saw that the 5-minute pushed up, forming this head. Then we had this left shoulder, in my opinion. And then, let me enlarge the screen. And then on the right shoulder here, on the right side, we had this price action over here. So the moment this trend line was broken, in my opinion, I was going to look for a short. Now you can see here on the timestamp below 8:55, 9 o'clock, that's when the UK market opens. So we had this huge push to the upside which failed. Then we had this short to the downside over here which came back up. Price tried again to go long, couldn't, and came to the downside. Now, pretty stupidly, I shorted it right here, and I shorted more or less into this 1-hour demand zone, and I shorted it into this 1-hour structure, into this 1-hour pattern which I saw over here, right? I shorted it right into this 1-hour pattern, and as a result, you can see price quickly dipped below, trapped everybody, including me. I'm a huge fan of the traps, as you know. got trapped myself, shot all the way up, engulfed, and went all the way. So yeah, missed out on this trade completely, and yeah, I traded against the higher time frame structure, and yeah, absolutely my mistake. Nothing to argue over here. So at the same time, however, I saw on US30 a similar play, a similar situation, and I really liked US30 today, the whole setup. So again, let's look at the higher time frame. We saw this over here. Over here we see some kind of a double bottom and then a push to the upside, okay? And let me draw this down a little bit so it makes more sense. We had here this breakout. That's literally how I drew it also on my chart. We had this breakout. We had over here this support slash resistance area. Then you can see that the market had like a double bottom on here on this resistance area, bottom 1, bottom 2. Now whenever you research double bottom and double tops, they have a neckline. So in my opinion, we had some kind of a neckline resistance support right here, like that. And we had another resistance level over here, this swing high. And let me quickly see to make this a little bit more, yeah, like that is fine. So yeah, perfect. And then of course we have this over here. Now, what do I see just by looking at the 1 hour? Now, what I saw on the 1 hour, as mentioned, we have this double bottom, price pushed up, pull back to the neckline. And then it kind of came into a ranging situation. It kind of started ranging over here between this resistance and this neckline support. And in this process, since the market is pushing to the upside, I saw a multiple touch area right here. Look at all these touches. I saw so many support touches over here. So I call this a multiple touch area. I'm writing that down. Multiple touches. And I pull this over here just so I remember that. So multiple touches over here. Okay, so now in addition, I also see this. I drew a trend line like that, or a pattern, so to speak. It's like here, like a triangle, something in this direction. You can also draw it like that. Now going on to the 5 minute, what did I see? I see over here, trying to walk you through nicely, what I'm trying to see over here is that as soon as the market opened, over here, as soon as the market opened 9 o'clock, it broke out of this triangle and pushed even above this resistance level over here. Now bear in mind, we have our multiple touches over here. What do I mean with multiple touches? Check this out. We had a touch over here, we had a touch over here, a touch over here, and touches over here. So we have multiple times we found support on this level. Now for me, the way I look at that is I have a play in my playbook which is called the triple bottom play. And with the triple bottom play, there's two ways how I can play that. The first one is that if the third bottom or the triple top, the third top shapes up around the opening, meaning after 9 o'clock, 9:05, 9:10, I take it right out of the gate. I take the trade right out of the gate. If the third bottom or the third top forms right at the open, okay, if at 9 o'clock the third bottom forms or the third top and immediately pushes away, I wait for the pullback. Now why is that? This is because I do not trade the opening candle. I don't like trading the opening candle. I like to wait. Even if the setup looks A1, it's a AAA setup, 100% setup, golden setup, whatever you want to call it. Whenever I see that, I wait. I wait for the pullback because the opening candle, in my opinion, even though it hurts sometimes because the trades would be phenomenal, it is like a casino. It is gambling, in my opinion. I just don't like to trade the opening candle, and this could be because I traded the New York session for quite a long time, and the opening of the New York session is at times just crazy. Like the first 10 minutes of the New York session are at times really crazy. Candles go up and down, and I just feel it's more gambling than anything else, in my opinion, okay? So yeah, so what I saw is that we had this bottom here forming right at the open, and at the open the market pushed away, so I was not inclined to take this. However, what I saw, if you delete this triangle, what I saw, in case you're not drawing the triangle, I saw over here a nice trend line break. I saw a trend line break, and I saw right here a nice demand line, nice 5-minute demand zone. Nice 5-minute demand zone. So what happened next? And I'll use the arrow. Market pushed away into the resistance, failed to break above it, came back, pulled back nicely into this demand. In this process, we broke over here the trend line. We broke out of the trend line. We pulled back to the 5-minute demand right here. And I was looking for a reaction. Whilst I was losing on that other trade, I switched over here and I was looking for a reaction. Now in this process, look what else happened. In the process itself, there was a head and shoulder that was forming. A head and shoulder right here. Maybe you can see that. There's a head and shoulder forming with a can't close setup, meaning that the price, whilst it formed this head and shoulder, broke out, it came back, it could not close below here. It could not close at all below here. Okay, the wicks came down, but they did not close. These candles did not close below these wicks of the left shoulder. Additionally, I need you to zoom in on that, and I need you maybe to pause the video and to quickly look at that. I also saw that once the price came back for the pullback, this wick briefly, just briefly went below, and that is what I considered as a short trap. People went short right here. Retail traders that don't know any better, they went short right here. The same mistake I made on German 30, people also most likely did over here, and they shorted it, and then the price turned around aggressively. So when the price turned around, and in fact after the short trap engulfed this candle, I was in the market. Like that, put my stop loss right below here, and I was simply looking to the left. And yes, that would have been a very nice target up here. I didn't hold that long, I have to confess. I was looking at this supply zone over here, this 5-minute supply right here, because you can see aggressive selling took place over here. So I was looking at this supply zone, and I was almost shooting at a 2-to-1 trade like that. Almost shooting at the 2-to-1 trade. Price came a bit back, went back up, so almost a 2-to-1 I took on this one. So I had a 1-to-1 loser on German 30, and then a 2-to-1 winner. Now, what's very important to point out over here is the following. It is all about risk management, okay? It's all about the risk management. Usually I take 1 trade a day. I really stay away from taking 2 trades. But what you have to do is you have to take your setups. Whenever you see perfect setups, in my opinion, for my playbook, that was perfect. It was with the higher structure, higher time frame structure. It was the pattern I was looking for, breakout, pullback, everything just aligned, demand, trend line break, that even the candle trap can close, everything aligned. Then you have to take these trades. You cannot stay away and decide, oh, I'm skipping this one I take. Why? Because you need the data. You need to collect as much data as possible to find out whether your trading style works or not, right? And you can only collect the data when you take these trades. Okay, when you take your perfect setups, and this was a perfect setup, so even though I had a loser, I had to take this. I couldn't skip it. I could not skip it, so that's why I had to take it. So my philosophy stands, I take 1 trade a day. If I lose, I lose. If I win, I win. But if I see such a perfect setup and I already took a trade, whether it is a loser or a winner, I have to take it, right? I just have to take it. And this was a very nice setup for me. I was very happy with it. And yeah, that's what I did. So that's why I'm saying it gets down to risk management, so that when you have a loser, you're not getting upset, no revenge trading. But when you see a good setup, you have to take it. Also, this isn't revenge trading, in case you think I revenge traded and I just entered another trade just because I was frustrated because I lost. That's not the case. It was really the quality of this setup which was good. In fact, in my Discord channel, We had one student that also took this trade and he even added on. A shout out to Albert, did perfect on this one. So he took the same trade and even added on some more to his position once he saw this pin bar over here, and he took it, I believe, for a 2-to-1. So also around up here somewhere. Phenomenal trade. Shout out to Albert. Really, really good. And yeah, keep going the way you're already going. It's perfect. Now, that being said, if you like this kind of content, please subscribe, like the video, stick around. I post these videos every single day or every day whenever I trade. I'm wishing you all a great day ahead. Hope to see you soon again, and thank you for watching this video.